You check the chart. It looks perfect. The setup aligns with everything you've studied. You pull the trigger. For a moment, it goes green, and you feel that rush of validation. But then, it stalls. A red candle prints. Then another. You tell yourself it's just a retest. You move your stop loss, just a little bit, to give the trade room to breathe. 10 minutes later, you're out. You've lost double what you planned. And then, the worst part happens. You get angry. You see another setup immediately, or at least, you convince yourself you do. And you dive back in with bigger size to win it back. By the time the session closes, you aren't just down, you're devastated. If this sounds familiar, I want you to listen very closely. You aren't losing because you don't know enough about technical analysis. You aren't losing because the market is rigged. You are losing because you are fighting a war against your own biology, and right now, your biology is winning. Welcome back. Today, we aren't looking at indicators or patterns. We are looking in the mirror. We are going to dissect exactly why you keep losing, why it feels like a loop you can't escape, and how to finally break the chain. Let's start with the hard truth. The human brain is not designed for trading. It has evolved over millions of years for one primary purpose: survival in a physical environment. It is wired to seek certainty, avoid pain, and grab resources immediately when they are available. In the ancestral environment, if you saw a threat, you ran. If you saw food, you ate it. But in the market, these instincts are fatal. When you see a threat to your capital, a losing trade, your fight or flight response kicks in. Your amygdala hijacks your prefrontal cortex. You stop thinking logically and start reacting emotionally. You freeze and don't cut the loss, hoping the threat goes away, or you fight back by doubling down. This creates a specific emotional cycle that drains your account. Look at this cycle. It starts with optimism when you enter. As the trade goes against you, it shifts to denial, it will come back. Then panic as the loss grows. Then capitulation. You exit at the bottom because the pain is too great. And finally, regret when the market inevitably bounces back after you sold. Most of you are stuck between panic and regret. You keep losing because you are trying to solve a psychological problem with a technical solution. You think a better indicator will stop the panic. It won't. The first specific reason you keep losing is something called result-oriented thinking. You judge the quality of your decision based on the outcome, not the process. If you take a terrible, impulsive trade and it makes money, your brain releases dopamine. It wires that behavior as good. You just rewarded yourself for a bad habit. Conversely, if you take a perfect, disciplined trade and it loses money, you feel punished. You have to understand that trading is a game of probabilities, not certainties. There is a random distribution of wins and losses for any given edge. You can do everything right and still lose. Imagine your trading results as a distribution curve. Most trades will be small wins or small losses. But occasionally, you will hit a streak of losses. If you don't understand that this is a statistical normality, you will assume your strategy is broken. You will start strategy hopping. This is the second reason you keep failing, the cycle of doom. You pick a strategy. You try it for 2 weeks. You've hit a normal losing streak. You panic, abandon the strategy, and go look for a holy grail system on YouTube. You find a new one, try it, hit a losing streak, and repeat. You never stick with a system long enough for the probabilities to play out. You are constantly resetting your edge to zero. Now, let's talk about the math that works against you when you let emotions drive. Most traders do not truly understand the geometry of a loss. When you lose 10% of your account, you need an 11% gain to get back to break-even. That's manageable, but because you lack discipline, you let that loss run to 50%. Look at this table. If you lose 50% of your capital, you don't need a 50% gain to get it back. You need a 100% gain. You have to double your money just to get back to where you started. By letting a loser run, you are digging a hole so deep that you are forced to take excessive risks to climb out. This is the death spiral. So, how do we stop this? How do we rewire a brain that is addicted to the dopamine of gambling and terrified of the pain of loss? We have to move from being reactive to being mechanical. Step 1 is to redefine winning. From this moment on, a win is not making money. A win is following your plan flawlessly. If you follow your plan and lose money, that is a successful trade. If you break your rules and make money, that is a failed trade. You must penalize yourself for lucky wins and reward yourself for disciplined losses. Step 2 is standardization. You need a checklist that is so rigid it feels boring. 1. Is the trend clear? 2. Is the entry signal present? 3. Is the stop loss defined? 4. Is the risk less than 1 to 2% of equity? If you cannot check every box, you do not trade. The goal is to remove you from the equation. You want to become a casino, not a gambler. The casino doesn't care if a player wins a hand. They know that over 1,000 hands, the house edge guarantees they win. Step 3 is the post-game analysis. You need to keep a journal, but not just a journal of entry and exit prices. You need a journal of your mental state. I felt anxious before entering. I exited early because I was afraid of losing profits. I moved my stop because I didn't want to be wrong. By writing this down, you move the experience from the emotional part of your brain to the analytical part. You begin to see patterns in your behavior, just like you see patterns on a chart. Look at this example. Notice the column for mistakes. Over time, you will see that 80% of your losses come from 20% of your bad habits, usually FOMO, fear of missing out, or revenge trading. Once you isolate the leak, you can plug it. Let's get real for a second. The market is an endless stream of opportunities. It will be here tomorrow. It will be here next year. But you won't be, not if you keep trading like this. The market is a mirror. It reflects your patience, your discipline, and your ability to handle uncertainty. If you are chaotic in your life, you will be chaotic in your trading. If you are impatient, the market will take your money and give it to someone who is patient. You keep losing because you are trying to get rich quick, rather than trying to get good slowly. Here's your homework for the next 30 days. I want you to cut your position size in half. Yes, half. I want you to detach from the money. I want you to focus entirely on execution. Take 20 trades. Don't look at the P&L. Look at the execution score. Did you follow the plan 20 times out of 20? If you can do that, the money will take care of itself. The money is a byproduct of excellence, not the target. Stop trying to beat the market. Start trying to master yourself. Fix your habits, manage your risk, and accept that losing is part of the process, not a reflection of your worth. If you're ready to stop gambling and start trading, hit that like button and subscribe. I want you to comment below with the one bad habit you are going to break this week. Is it moving stops? Is it overtrading? Let's hold each other accountable. I'll see you in the next video. Stay disciplined.